Under the current system, debt is the new wealth. Debt can be used to magnify wealth, but it can also be used to make matters much worse. As we saw during the financial crisis, people can get themselves into too much debt. But more importantly, we also learned about what derivatives are built behind this system and how they are interconnected and intertwined into everyday banking, finance, and personal matters. But only if you care to see. You came here for the truth, so let me unveil that for you. Today we are going to talk about the velocity of money. I want to get into that today. I also want to talk about what's happening with the economy, with the job situation. I want to look at big changes that have come here in 2020 and moving forward. I've got a lot of information, way too much to cover in one video, but I'll try my best. Let's go. Week 20 of the collapse of the US labor market. Total continued claims, state and federal. I want to make something very clear. This is out of Wolf Street, not seasonally adjusted, because they use that in order to manipulate what's happening. But if we take those numbers here, we are still right around the peak. It's 32.1 million. It's very important to see this information, of course, because it's going to give us some insight as to what is actually happening. They keep telling us that things are getting better, but of course we know that isn't the case. You can see many statistics that have fallen off a cliff and then have started to move up. Others have moved up even further. But in general, what we are experiencing here is unlike anything we have ever seen in history. But I'm supposed to come up here and tell you that everything's going to be okay. I'll be a cheerleader. I got to be positive. I have to always tell you to buy stocks, to buy Amazon stock. And if not, then I'm pessimistic and then I'm the bad guy. And you see the views falling because people are just looking for the next best thing, the next investment. They're looking for financial advice, and unfortunately they're not going to get it here. Once they learn that, they leave. I want to thank you for joining me today on today's Mad Scientist Money GPS episode. Oil drilling drops to 15-year low with shale in full retreat. We've been talking about this since the beginning. As this has been unfolding, you have seen that it has become very unprofitable for a lot of these companies, especially at this time right now where demand isn't where it used to be. So this, of course, puts a lot of pressure on these companies. They start laying people off. The real estate in the area, they start going down. You have a dramatic effect, a snowball effect, a domino effect. This is what's happening. Drillers cut exploration in U.S. oil fields to a 15-year low as billions of barrels of old discoveries became worthless and explorers abandoned growth plans. The number of active oil rigs in the U.S. fell by 4 to 176, the lowest since 2005. This is the chart that corresponds to that info. You can see the shale explorers parked 3/4 of working rigs in 2020, going down to levels we haven't seen since the financial crisis. This article out of Bloomberg is going to get me into what I need to talk about next. Short on money, cities around the world try making their own. Fans of complementary currency are betting that this Depression-era idea for keeping towns alive by printing local money can prove its worth as relief. We've seen this come and go. We've seen different institutions that have been trying to do their own thing. You've had cities do this, towns do this. You have digital currencies. You've got so many different things that have happened, and this has been going back as far as you can see in history. But I want to make something very clear. It's that just like this that they're showing you on the screen, it's a piece of paper. It is made out of wood. It's made out of anything that they decide. It's just an idea because it is only given value based on someone's desire to trade for it. If nobody sees the value in it, they will not accept it. And so whatever dollar value you give it, in this case here 25, but what if it was 5, or what if it was 10, or what if it was 100? Who's deciding that? Of course, there is an understanding in between the two parties that if I take this 25, I can give it to the next guy and he will accept it for 25. But of course, when we lose faith in this system, this currency, which was maybe from a central bank, maybe from a government, or maybe from a town, maybe that 25 is no longer 25 and people start thinking that it's more worth 20 and then 15 and then 10 and then it's worth 0. And that's what happens ultimately to every single currency. That's the way it's always been. And governments do this to themselves. They devalue it over a period of time. So keep that in mind as I move into the next few things. Fiat currencies versus gold since 1900. This gives us the US dollar, British pound, Japanese yen, and gold. You could see what's been happening over this period, 120 years. The Japanese yen, I mean, it's hard to tell, but essentially has no value anymore when you relate it to gold. But the US dollar, which is right here, has effectively done the same thing. It's under 1%. It has gone down 99% over this 120 years. If you measure it in dollars, it's still the same thing. $1 in 1900 is $1 in 2020, but they have a very different meaning. Isn't that right? $1 would have got you a lot of stuff back in 1900, but $1 today definitely doesn't give you much. But if you look at gold, something that's physical, something that is real, it maintained its value. Now, isn't that such a strange concept? You have two things that were the same in 1900 as they were in 2020. 1 ounce of gold, $1. There are differences, of course, what's behind the system. But bear with me for a second while I make this simplified. They're supposedly the same thing, and yet very different. What has happened along the way? Well, the metal hasn't changed. It's the same metal from 1,000 years ago and before. But the currency has been devalued by debasing it, by printing more of it, by expanding how much is out there in circulation. And without that fundamental understanding, people will not know what to do. The question that people are always asking is, which stocks do I need to buy? Instead, they should be asking, what's happening to the money? Even mainstream guys out there, Tony Robbins, Grant Cardone, they're saying, look at the paper cash that you have today. It's garbage. It has no value. And that should be so telling when people like this are starting to realize it, starting to speak up about it. The real estate market is really changing today. I'll show you a couple articles here. Zillow CEO real estate market is beginning great reshuffling as people seek more space at home. The US real estate market is beginning to show signs of a great reshuffling as people relocate to homes with more privacy and space. Millions of people are considering moves for a slew of reasons, mostly being to downsize, upsize, or get closer to family. In this case here, this particular builder is putting in office space in the homes that they're building because they know that more and more people are working from home. That's going to be a continued trend. There is such a shift that is happening right now. People are moving out of the big cities, office towers, all of the skylines filled with these big office towers, financial companies, and they're all empty. There are few people in these office towers right now. We're talking about skeleton crews in many places. You might think, oh, we're back to work. Everybody's back to work. I'm telling you right now, you look around major cities, a lot of these different financial firms which operate all the big towers, there are very few people working. Why? Because they can do the exact same job from home. Just keep them home. I have heard from many different people, different cities, different places around the world. We are working from home indefinitely. They're telling us September, then they're telling us January, then they're telling us summer 2021. Doesn't matter. The point is that there's a big shift. It's happening now. This is affecting many different industries. So we need to stay ahead of that in the knowledge if you want to pick up on different investments or if you just want to stay ahead of the curve. We'd all be sitting in our favorite theaters. Dire outlook for cinemas right now in the United States. Rampant cinema closures have forced American studios to alter their movie release strategies. Of the nearly 12,000 theaters that are currently open, more than 90% are located outside of the US. So of course, a lot of these big box office films are not going to be number one released for the time being, but also production isn't happening from what I understand. And we look at how many jobs are focused around that, you're going to have serious issues. Retail rents plummet across New York City as America's glitzy shopping districts turn into ghost towns. This is one city that I'm watching very, very closely. For those who are located in New York, please drop some comments. I need to know what's going on at the ground level. I am definitely seeing an impact right here with the sales, with the prices, with the jobs in general. There are so many areas in New York. We're talking about prime real estate locations that do not have people in them. These businesses that were once there have left and they're not coming back. I always try to bring this information to you when I can, looking at the breakdown of the top 1%, the next 9%, next 40%, and the bottom 50%. Well, check this out. The top 1% have seen a nearly 300% increase in wealth since 1989. But you break it down even further, and I want to show you what's going on with the bottom 50%. So if we take it back to 1989, we're no better off in this case here. The bottom 50% have seen essentially a beatdown, and there's no other way to put it, because while everything was rising throughout this period, through the late 80s into the 90s, 2000 comes around and everything changes. Everyone was able to get a boost to some degree, but not the bottom 50%, unfortunately. And that's truly important. I mean, we look at all of this and we can see that there is clearly one group that is benefiting more than every other. The top 1%, or if we look at it, as we go in even further, the top 0.1%, the top 0.01%, the further up the food chain we go, the more benefit they have been getting over this period. You look at it back over the last 5 years, over the last 10 years, over the last 20 years, this group just keeps getting these exponential gains. And what is the solution? Nothing that they can provide, that's for sure. The central bankers, the technocratic elite, all of these people, they're all in it together. Fed balance sheet versus monetary velocity. This is very interesting to me because when I look at all of it, it's really easy to explain. The Federal Reserve and every other central bank around the world have literally broken the system. As the Fed's balance sheet has expanded, we have actually seen a deflationary process. This is truly unbelievable, but here it is. I'm going to show you a few charts associated with it. The velocity of money needs to move. Remember, we're talking about currency here. Current. It needs to flow. It needs to move. And yet it's doing quite the opposite. Take a look at the Fed funds rate versus the monetary velocity. As they decrease the interest rates, the monetary velocity goes along with it. And that really started to screw up after 2000. 2000 was actually a very important time frame because everything began to move in sync as the central banks began to take over. As we started to lose any semblance of a free market, it all dissipated, it all disappeared. Monetary velocity versus the deficit. Now you see this, that orange area being the deficit, and the blue line is the velocity of M2 money stock. Clearly we have big issues at hand because there is no resolution to this. They print more money, it only makes it worse. They reduce interest rates, it only makes it worse. But you don't have to worry if you're part of the 0.001% because you're going to get all the money. This is a chart that I wanted to bring to you because it's something I talk about very frequently, and now I just have the new numbers on it from Real Investment Advice. Wanted to show you. You could see what has happened over the years with the GDP. It falls, it never goes back to the growth rate it was at before, unlike the debt, which continues to escalate at rates that just continue to increase. There is no paying off the debt, there is no reduction of the deficits, and things are only getting worse. So you want me to be positive? You want me to cheerlead? Look, I'm just going to give it to you how it is. Doesn't matter what the views are. Doesn't matter what the subscribers are doing. I'm just hoping that people want the truth. Really quickly, to finish it off, Buffett buys back a record of $5.1 billion in Berkshire stock. The share repurchase is the most ever in a single period for Buffett. Here's the chart that corresponds to that information. You could see right here on the right-hand side, 5 billion is quite an excessive number based on what we've seen historically. The buybacks are a relatively safe way to deploy capital in an uncertain environment, but it's clear that that's not all he's doing. I think it's very clear what they are doing. They're waiting. Just like Sir John Templeton, they truly believe that patience is a virtue. We'll see if in the end it pays off. They've got something like $146 billion in cash and short-term investments waiting and waiting and waiting. That's all for this video. If you found that informative, hit that thumbs up button. When you do, you are supporting me. I want to thank you for that. If you want to check me out on Instagram and Twitter, you can do so at The Money GPS. If you want to learn how to sell stuff online, you could do so for free at the AmazonGPS.com. Do you want to understand the financial system? Do you want to know the foundation, the history, the asset classes, making money? All those details are in these two books. You can check them out at the link in the description. If you want the audiobook instead, themoneygps.com. Wait a second, don't go anywhere. Have you seen this video? Really good detail in here. Definitely check it out. Watch it at 2x speed if you have to. Click it. I'll see you there.